Ever wondered how car insurance claims work in the USA? Well, let's delve into the basics. Car insurance claims are essentially requests made to an insurance company for compensation. This comes into play when you've had a car accident and need to repair your vehicle or cover medical expenses. Here's how it generally works. After a car accident, you reach out to your insurance company to inform them of the incident. You provide all necessary information, including the details of the accident, any involved parties, and the extent of the damage or injuries. Your insurance company then sends an insurance adjuster who evaluates the claim to determine the payout. It's a process that might seem daunting, but it's designed to help you recover from the financial setback an accident can cause. Sounds simple, right? But there's another aspect to consider, and that's diminished value. So you've got your claim sorted, your car's repaired, but is it still worth the same as before the accident? Not necessarily. This brings us to the concept of diminished value. It's the cold, hard fact that accidents, even when expertly repaired, can lower a vehicle's market value. Why, you ask? Because the history of the vehicle now includes damage. There are three types of diminished value to consider. First, there's immediate diminished value, which is the difference in resale value before and immediately after an accident, before repairs. Then, there's inherent diminished value, which is the loss in value even after professional repairs have been done. And lastly, we have repair-related diminished value, which is when the vehicle's value decreases because of poor quality repairs. These are important terms to keep in mind when dealing with car insurance claims. Now that we understand what diminished value is, let's dive into how it's calculated. Calculating diminished value might seem complicated, but it doesn't have to be. Let's break down the common formula used for this calculation, known as the 17C formula. It's named after the 17th clause of a Georgia Insurance Commissioner's ruling, but it's used broadly across the USA. First, we have the base loss of value. This is typically the difference between your car's market value before and after the accident. Next, we introduce the damage modifier. This is a percentage that reflects the severity of the damage to your vehicle. A minor fender bender, for instance, will have a lower damage modifier than a major collision. Lastly, we have the mileage modifier. This adjusts the calculation based on the age and mileage of your vehicle. The higher the mileage, the lower the diminished value, as a general rule. By understanding this formula, you can have a clear estimate of your car's diminished value after an accident. Car insurance claims and diminished value are two key aspects you should understand as a car owner in the USA. We've delved into both these facets today, beginning with the process of car insurance claims. From filing the claim, dealing with adjusters, to finally receiving your settlement, we've seen that each step holds its own importance. Next, we explored the concept of diminished value, an often overlooked yet significant aspect of post-accident claims. It's crucial to understand that your car's value may decrease after an accident, even with complete repairs. Then, we learned how to calculate this diminished value. We discovered that factors like the car's pre-accident condition, mileage, and the extent of damage all play a role in determining this value. But remember, each case is unique, and the calculations may vary. Armed with this knowledge, you're now better prepared to navigate the aftermath of a car accident. Remember, knowledge is power when it comes to insurance matters.